We're 2 minutes over the hour. I want to be conscious of everyone's time. We should get started. First of all, my name is Ryan Tolson. I lead the offshore wind commercial team within Esgian. I see a number of clients that have logged in, see names that I recognize, and many new names as well. So thank you all for attending. Much appreciated. For those of you that do not know who Esgian is, we're headquartered in Oslo, Norway, and we're a market intelligence and data analysis firm for the ocean industries, operating in 3 primary segments. That's offshore rigs, shipping, and offshore wind. Myself and everyone on the call here today is 100% focused on offshore wind, and offshore wind is what we speak on today. But each month we host a short webinar that covers a current and relevant offshore wind topic. We do our very best to keep these to 19 minutes. We understand time is precious, and we want to provide you with quality information without a huge time commitment. If you haven't already, I encourage you to follow us on our LinkedIn page and also sign up for our newsletter. Here you'll be kept up on all future events, news, and our quarterly reports. Within Esgian Offshore Wind, we offer a subscription-based data platform that provides transparency and clarity into the global offshore wind market. Our client base are developers, vessel operators, companies within the supply chain, and consultancies, and much more. We're primarily helping our clients with business development, what's happening in the future, which companies do I need to reach out to, but also competitive and strategic analysis. We're very excited for today's discussion. The quarterly tends to be a favorite, and this past week we released our client version and the executive summary of our quarterly reports. And today we're going to highlight a few key findings from the report. You may have noticed that this past quarter, confidence has returned to the US market. New countries are awarding their first projects, and the global project pipeline has reached an all-time new high. Everything that is touched on today has been sourced from our wind analytics data platform. Today, we have a few of our analysts that have been responsible for putting this report together. That is Oliver, Hero, and Casper. And with that being said, I'd like to hand it over to my colleague, Oliver, who leads the offshore wind team, to take it from here. Go for it, Oliver.
Perfect. Thanks very much, Ryan. Good to see everyone on the call today. So many people. As Ryan said, it's the Q1 update where we run through just some of our findings from the first quarter. We've only got a short period of time today, so we will keep it brief, keep it snappy, and encourage anyone who's got any additional questions either to ask them at the end, or we will answer them at the end, I should say, or we can pick it up after the call one-on-one as well. So let me start by setting the scene. I'll kick things off with some brief thoughts on the macro outlook for the offshore wind sector, and then hand things off to Hero and then on to Casper as well. So let's start with the macro outlook. This quarter, from our point of view, has fully embraced the reset after what was undoubtedly a relatively challenging end to 2020 to 2023 for the offshore wind market. The first quarter of the year is always the slowest. Every year, and 2024 so far seems to have stuck to that storyline. However, the data that we spend all our time looking at suggests that it's likely that Q1 will serve as a springboard for the activity boom that lies ahead in the rest of the year. It's certainly not all good news. Higher development costs clearly continue to be the reality for the global offshore wind market, and this is certain to remain as a key driver for the market's direction for the rest of the year and beyond. However, as we do move through the rest of 2024, the data seems to be pointing towards higher offshore installation activity, as well as a larger volume of contracts being awarded. Just as an example, in Q1 contracts back in the US market, we've seen continued of new countries awarding their first projects and leasing processes, and the global project pipeline reached a new all-time high. As you can see on the slide that we're showing at the moment, which is our regular look at that project pipeline, we've just jumped up now to somewhere just short of 650 gigawatts of projects that we're globally tracking on a daily basis in our databases. All that remains now is that small job of delivering on that pipeline, developing those wind farms to actually produce some power. And that's where we're seeing some of the difficulties. So to sum up the macro perspective, in short, although the sector is adjusting to those new harsh cost realities, we still think 2024 could be a record year, with developers aiming to increase total operational capacity by some 23%, closing on 43 gigawatts of operational capacity. But let's address some of the signs of weakness that I mentioned that we'd seen in that Q1 2024 data. Quite notable by their absence were contract awards. The start of 2024 was very quiet for new contract announcements, and that slowness cut across all of the major components that we're tracking. It's possibly, arguably, a bit too early to draw too many firm conclusions just yet. But one thing we're watching quite carefully is a number of leasing processes that have seen preferred suppliers announced very early. And by that, I mean much earlier than we would normally expect. Here are a couple of examples surfaced in Japan and the US. And as I say, we're watching this closely to see in future awards whether this becomes a clearer trend or not. In terms of actual contract awards, major contract awards, it was definitely a very quiet 3-month period for turbine contract announcements. Vestas, however, was part of the successful bid for Hapo-Noshiro block in Japan that was put together by JRE, by Iberdrola and Tohoku Electric. On that project, Sumitomo Electric was named as part of the winning bid for both the array and the export cables. If we look at the foundations market, in fixed foundations in the US, we saw a couple of contracts being revealed as part of the news around the successful solicitation process in New York. News of 2 projects there that will use EEW's Paulsboro facility for monopile production and expand that new factory in the US. Other than those 2 early news stories breaking for the US, the only fixed foundation contract award that was revealed was for Inchcape in the UK. Notable there for the monopiles being split yet again between 2 Chinese companies, this time Esgian Offshore Heavy Industries, and for the first time Guangzhou Wenchong. Casting a quick eye over other components, elsewhere we saw Hellenic Cables continuing its really quite strong run of cable contracts, this time for Baltic 2 and 3 in Poland. And we also saw at the end of the quarter a couple of substation contract awards, this time from RTE in France that were awarded to Chantier de l'Atlantique for upcoming projects there in the English Channel and in the Atlantic Ocean. Just a quick reminder about the chart that you can see here, which reflects the lead times that we're tracking for all of those major primary components. Here we're defining lead times as the duration and the length of time from the contract being announced to the wind farm becoming operational. So in theory, just to run through this, if the line is going up from left to right, lead times are getting longer, the market is getting tighter. If you see the lines falling, that means the market is getting softer. General terms, if we just look at the far right-hand side of the chart, you can see that lead times have continued to tick up over the course of the first quarter of 2024. And we remain at what we think are pretty elevated levels, really reflecting that general market tightness across the board. With those outlooks from the macro perspective, let's dive into some of the details. I'll hand things over to Hiro now to look at some of his views on the vessel market.
Thank you, Oliver. Q1 2024 has some unique aspects, particularly in the vessel market, with South Korean companies striking agreements to hire Chinese vessels for offshore wind installation on South Korean projects. The South Korean company, DayC, signed an agreement with the Chinese company CCC to hire the jack-up vessel Guanghang. Furthermore, SECO signed an agreement to hire vessels from the company and possesses 60. Well, change making the vessel in the APEC region, non-Chinese vessels would compete with the Chinese vessels. This was for many not expected. Going to the European market, positive developments occurred in the Polish offshore wind market, where the Polish project Baltica 2 awarded contracts for essential vessels needed for the offshore construction for the project. Onwood was awarded the foundation installation contract, and the company is expected to use its heavy lift vessel Svanen and its jackup vessel Aeolus. However, it's not set in stone that Aeolus would be used, but Svanen is definitely being used as it's very competitive or well in that region. Turbine installation contracts were awarded to Fred. Olsen Windcarrier and Cadeler, respectively. Fred. Olsen Windcarrier will work in the first stage of the turbine installation, while Cadeler will handle the second, which is the last stage of the turbine installation. Then going back to the APEC region, there was some movement in Japan, as Shimizu will be the company installing both foundation and turbines on the Akita, Happo, and Ashore project. This project is somewhat far out and expected or estimated plus its steam installation segments. Furthermore, announced a contract for a project with an undisclosed client. For this project, Cadeler will use its jackup vessel Windsilla. There are some ideas of what project this would be, but no need to dwell on this as it will be revealed soon enough. The current activities offshore in the installation segment have not been unprecedented, yet they have been healthy. Have been used on a global scale for 11 projects, utilizing 16 jackup vessels and heavy lift vessels in total for both foundation and turbine installation this quarter. Several projects conclude turbine installation this quarter, include the French project FICAMP, the US project South Fork, and the Taiwanese project Greater Changhua 1 and 2A. Going over to an extremely important segment, which is maintenance. The neglected piece of the market is maintenance, where the maintenance of heavy components need attention due to requiring jackup vessels. The maintenance market is expanding, yet the vessel market is in this segment is not growing as fast as it should. In the use of competitive vessels, the maintenance segment saw Windsilla working under its long-term agreement contract with Van Oord, servicing Vestas V164 turbines in the UK for the Moray East project and the European Offshore Wind Deployment Center, Aberdeen. However, securing competitive vessels like Windsilla for the maintenance market will become increasingly difficult as they become busier installing turbines on new projects or foundation for that matter. Players in this segment are Saipem, which have a jackup fleet dedicated to the extensive maintenance work in the sector. Saipem has long-term agreements and firm agreements with companies like Siemens Gamesa, Vestas, Ørsted, and RWE. Moreover, they are available on short notice for numerous other companies when their suppliers cannot meet their requirements. So they are have a second place for some companies. This segment of maintenance has been a tough market to be in, as Saipem has had some challenging years in this market, as well as other companies. Yet going forward, it looks more optimistic for the companies like Saipem. This is likely due to more consistent workflow and better terms on the contracts, and among other reasons. Going to Casper.
The last 3 months has been a number of projects changing hands, particularly on the East Coast.
Casper.
Projects changing hands.
Sorry to interrupt, Casper. You're getting interrupted. I'm not sure if it's the headphones or not, but could you just repeat?
Yes, I can try again if you can hear me now.
Yes, thank you.
Yes, okay. I'll start again then. The last 3 months has seen a number of projects changing hands, particularly on the US East Coast. In addition, we have also seen some developers exiting joint ventures that are seeking to develop large-scale floating projects. Decline in terms of with about 10.9 gigawatts noted in Q1. And on the East Coast, some of the big news includes Equinor and BP swapping project stakes, with Equinor taking full ownership in Empire Wind and BP taking over all of Beacon Wind. It is expected that after a recent win in the New York solicitation round 4, that Equinor will take an FID on Empire Wind very soon. And they have also mentioned they intend to find a new project partner going forward. Shell has also announced their exit from South Coast Wind, selling to project partner Ocean Winds, in addition to Eversource exiting a number of projects on the East Coast, including selling their 50% stake in Sunrise to partner Ørsted and stakes in Revolution and South Fork Wind sold to now BlackRock acquired GIP. Over to the floating side, we see Simply Blue Group parting ways from Eolus in the Sea Safari joint venture with projects in Sweden and Finland. And Shell again selling down the projects, exiting the Munmubaram floating projects in South Korea, selling their 80% stake to partner Hexicon. And lastly, Total Energies has announced their expansion into the Nordic markets, partnering with Danish developers European Energy. In the same process, Total also took a majority stake in 2 Danish open door projects that are still going forward. The partnership has also announced the intentions to partake in the upcoming Danish auction rounds, as well as together explore expanding into the Swedish and Finnish markets. And lastly, we return to the macro view and consider what we are seeing in terms of new lease awards. And yet again, similar to last quarter, we're not seeing the big numbers coming through. A total of 2.9 gigawatts was awarded in the first months of 2024, a quarter-on-quarter increase of only 100 megawatts. These results came in first time awarding in Norway, with SN2 going to Parkwind, now under the Jira Nux umbrella, and Inca. The Livy 1 site going to CIP and Ignitis, their second win in Estonia, and as mentioned, the Hapo and Noshiro site going to JRE, Toku, and Iberdrola in Japan. 2.9 was awarded, but it was a bit lower than what was expected in the quarter. After the Gippsland's Australia rounds results have not yet been announced. There is, however, high expectations for a number of awards in Q2, after several rounds have been launched early in Q1. Some of the larger rounds include the Dutch, the German, and the Taiwan rounds, all familiar markets to offshore wind. And looking a bit ahead to the rest of the year, up to 68.1 gigawatt of capacity could be awarded, mostly in the later half of the year. We are, however, seeing some delays and rounds being postponed, like the Lithuanian round, Danish rounds, and some results out of France. So some of the award capacity will most likely spill over to the start of 2025. And as always, if you want the latest information on the rounds, please remember to check out our Wind Analytics platform. And with that, I give the word back to Oliver and Ryan.
Oh, Oliver, you're mute there.
Apologies. Just a quick reminder to people on the call, if you do want to ask questions, Q&A is open. But let me just wrap things up with 2-line conclusion here. Definitely a slow start to the year for first quarter of 2024, by whichever measure we look at things. A lot of contracts, lease round awards, all of these things tended to slip from Q1 expectations further into the year. Nevertheless, we remain pretty positive on the market. We can definitely see momentum building, and the signs still indicate that 2024, when we look back at the full year, will prove to be a pretty strong year for offshore wind, despite that relatively slow start. So maybe let's leave it there in terms of the presentation. I can see we're just after 20 past the hour. We try and keep these nice and short, but please do ask any questions if you do have any, and we can endeavour to answer them.
Excellent. Thanks, Oliver. And as we're waiting for any questions to come through, just want to thank Oliver, Hero, and Casper for the thorough details in such a short period of time. Also, I want to remind everyone to sign up for our mailing list, follow us on LinkedIn. This is where you're going to get updated news and events from us. Also want to invite anyone for a no strings attached demonstration of our database. I'm more than happy to walk you through that. Simply just reach out to myself and we can get that coordinated on the calendar. And lastly, I hope everyone found today's discussion to be beneficial. Each month we host a webinar, short and timely, relevant topic. So we look forward to hopefully having all of you on next month's webinar. We do our best effort to keep these as close to the third Thursday at 3 o'clock every month. Seeing if there's any questions. Doesn't look like it. So with that being said, thanks for everyone's time. Hope to see you next month, and we're always available for questions. Take care. Thanks.